started with our panel on CBDCs, and I'm very happy to welcome on stage Bartolomeo Poggi, our moderator and legal officer at Blockchain for Europe, and Steiner from Bitpanda. So welcome, big round of applause, thank you all. And we also have joining us online, Heike from Bundesbank. So thanks, a big round of applause for her. She has to hear you all the way where she's connected from. So guys, thanks so much. Enjoy the debate, and as soon as we have our last speaker, we'll have him join you all on stage.
Good morning to everyone. Just to quickly introduce myself, my name is Bartolomeo Poggi. I'm a policy officer at Blockchain for Europe. I am delighted to be moderating this panel today. We will be talking about CBDC, specifically on the future for central banks. Today we'll delve into these questions with the help of our esteemed panelists. They bring a wealth of knowledge from different perspectives. We have representatives from the private sector, speaking directly with Christian here, from Bitpanda. We're delighted to have Heike from Bundesbank, and shortly we will be welcoming MEP Nikos Papandreou, who is also Shadow Rapporteur on the Digital Euro. So overall, what we were thinking the agenda could be for today could be to, first of all, try and define what a CBDC is, exploring how they differ from traditional money, examine the focus on specifically retail CBDCs given the length of the discussion we have today, and at the same time try and delve into what Europe's perspective is specifically for the Eurozone and what the vision is, especially when competition seems to be the topic of the day. So without further ado, perhaps we can start directly with Heike, if we could give a quick overview of what constitutes a CBDC, if we had to define it.
Yes, thank you, Bartolomeo. Yes, CBDC, Central Bank Digital Currency. It's in the name, it's a central bank money, which you find as, yes, as a person, as everyone, only in the form of cash up to now. And as a bank, as a commercial bank, you have it as an account with the central bank. This is central bank money. And to make it digital, that means for the wholesale CBDC, which is the commercial bank money in a new technical form, that would be a token, for example, or some solutions around that token-based things. And for the public, then it will be something which can be account-based or token-based, that is quite open and up to the central bank who is doing that, and that would be a substitute for cash. And to separate it a little bit, what you call it traditional money, I think cash is the most traditional form, and then you have the so-called gyro money, which is commercial bank money, which you have on the account. Every private person as well as every company has it with a commercial bank, and the difference is the liability. With the commercial bank money, it's the commercial bank who is liable that you get it back, and for central bank money, as the name says, it's the central bank.
Well, thank you very much for this. Perhaps
my explanation. Thank you.
Thank you very much. Perhaps, Christian, I wanted to ask you to follow up on this question. First of all, do you agree with this definition? And also I would like to ask, how does this then differ from a stablecoin, for example?
Yeah, thanks. I think several points are quite important in this regard. So first of all, of course, I agree with the definition of Bundesbank. How could I not? But if we look a little bit deeper into that, what does it mean not only for the industry, for the banking world, for the whole setup? It's the first time, if this goes through, that you will have access to directly to central bank money. That's not a small change. So we used to have very different systematic, where you always had your money at a counterparty that is licensed for that, where you had all those CR requirements to ensure that they are financially stable, sound, that they can do their credit business, that they can do the deposit business, and suddenly we have money directly at the central bank. Why is this so important? Because I think if you look at the crypto industry, you see that there's the same trend. You can talk about self-hosted wallets in this regard. You can also talk about intermediation with CASPs having the wallet for you. So you see there are a lot of trends that are actually overlapping. I think one important part is that, especially on the retail side of CBDCs, they're focusing a lot of making it cash equivalent. So a lot of things to think about. What is really the incentive for the people to use it? Is it like going to be cash that is used online? That has a lot of implications on privacy matters, on anti-money laundering matters, but also on the whole structure. And then the second part is, how do you want to structure that compared to normal money, compared to Girl money, compared to stablecoin? And maybe I'll touch upon that a little bit and elaborate what I mean in this regard. So if you see how money used to work, having cash, relatively straightforward. You can use it peer-to-peer. You can use it to just, cash it in everywhere, so to say. Then we had the whole Girl bank money, where you had the whole a little bit more elaborate payment flows, where you had a lot of players, Visa, MasterCard, other ones connected to that, a lot of digitalization in this regard, but also the process itself. I don't know how much of you are aware of the whole process of acquiring, of issuing, etc. It's quite complicated to have all those processes. Now, with CBDCs, we actually have the chance of simplifying that process again, because we will have a settlement system, to simplify it a little bit, that is directly based on central bank money. So if you think about initiatives like the TIPS plan, like instant payments, that is working quite well together with this approach. So in an ideal world, these two things would sync quite well, and then we would have something that is quite similar. But on the other side, and I think stablecoins was very well mentioned, it's important to also see what we did for e-money tokens, what we are now doing with Mika, and how stablecoins will be in this new environment. So I think to bridge that gap is going to be interesting, and then we will also see how much of the innovation happens really in the private sector, how much really happens in the governmental sector, and how those 2 points will interconnect. And I think that's for sure one of the biggest topics. If we at one point in time reach tokenized central bank money, I think then we are really there and can combine the best of two worlds. I know it was a quite broad introduction, but first of all, we're still missing one of the panelists. Secondly, I also wanted to bridge the gap that you see how big this topic is and how much that could change. And if, especially in the banking industry, they think that might be one of the biggest game changer, because this intermediation is really the core business. And they are, I would say, even much more reluctant than maybe the crypto industries on CBDCs. And there are some issues with the crypto industries as well. So yeah, I think it's a very interesting discussion. It's a little bit less on the top of our minds because Mika is very much shining out. But I think I would open with those points.
Well, thank you very much. You mentioned innovation, which I think is one of the key words of this panel, but more specifically also the whole of this summit. And I would like to reiterate with Heike, if, for example, is this part of the vision, for example, of Bundesbank, or more, what exactly does Bundesbank see the unique value of a CBDC introduced within the European Union? Perhaps you have some perspective from a central bank on this?
Yes, thank you. Might be I would like to add a little also to Christian's explanations. It's not the first time that people have access to central bank money, because cash is central bank money. But this would be in a digital form. And it's not that we think that it's a threat for the intermediaries, because they will be involved anyway, because it is not planned that everyone has an account or a wallet with the European Central Bank or the national central banks, but that would be done via access over the intermediaries. So they will be kept in the game, and that is a very important point from our point of view. Yes, what we think, what we can do, because the question whether CBDC for retail payments is necessary, I think that has to be decided in every jurisdiction for itself. And we as central banks, as well as the European Commission, think it's necessary to have such a thing, because then we would have a universal form of digital money, which you can use in every situation, in every country. It would be pan-European. It would be, it will be set it on European rails. You can say the infrastructure will be built by the European Central Bank. And this is one, so you have dependency at the moment, and then you would have more independency with our critical infrastructures in payments. So that is one of the things. And the last thing is, as central banks, we can observe that there is that the demand for cash is decreasing, and that is also for us a reason to think about how can we offer our central bank product for the broad public in another form, in a digital form. And that is why we think the project is really justified.
Thank you very much for this explanation. I would like to take the opportunity to welcome MEP Papandreou. Thank you very much for joining our panel. Perhaps we can...
Does it work? Oh, sorry for being late. The police stopped us and we had to walk for some reason, I don't know. And it didn't help that I was MEP. It got them angry. So it was 2 kilometers, so I'm sorry to be late. So I know the topic, but I don't know if you can summarize.
Yes, of course. So we just very briefly went through the definition effectively of a CBDC. We asked what the perspective of a central bank is in developing a CBDC and what the unique benefits as a central bank are currently seen inside of Europe, specifically the European Union. We asked for a perspective on, from the private sector of what the definition might be, the differentiation with a stablecoin. So perhaps now we could jump in directly on a project that we know you will be working on, which is effectively the digital euro, as you are shadow rapporteur on the file. And I wanted to ask you, what makes effectively currently the digital euro a unique project for Europe? And just wondering if you could give us a quick glance as to where you find yourself now.
I'm what's called the shadow rapporteur, very nice terms, which means I have some responsibility, but not everything. So it's a very interesting, shouldn't call it a project. I think we started politically rather than technically, which we can talk about the details. And the political element is sovereignty, again. Something that Europe is losing, and in the sense all the superpowers are no longer in the past so strong with their currencies. Now the other question is, should not we allow the Central Bank of Europe to have a digital currency? Let's ignore now, I know the technicalities that we spend a lot of time talking about how it'll work and what the infrastructure will be and what the limits will be. Let's drop that argument for a second and say whether we should allow, that's our role as MEPs, because the law is Article 133 of the Central Bank, says we have to legislate for the digital euro. So all we're saying is, should Europe enter the digital space? Given all the stable coins, given other CBDCs, whatever, central bank currencies, China, and maybe even Ireland, I'm not sure if they're going to do it. I've heard they might. So are we going to do that? And all we're saying is let us allow for the central bank to make that choice. And that'll put us into the game, if you want it, to put it like that, of digital currencies.
Well, thank you very much. I would like to ask Christian and Heike if you wanted to comment on this vision.
Yeah, maybe shortly. I think there's no other way. We're all going more digital by the day, and if we're not doing it, Heike mentioned it, cash is gonna, I wouldn't say it's dropping out, it's still very, very important. There's a lot of data that is still broadly used. Nevertheless, we all know we do more business online, we're all growing more digital by every minute. And if we don't have a cash equivalent digital, it will be all going to stablecoins, which has its pros and its cons. So also that is maybe very important in this discussion. We should see, at least from my point, a fair competition between the central bank digital currencies, the digital euro on one side, and the, in bracelets, regulated, under MiCA, EMTs, e-money tokens, etc. So I don't think we should have an unregulated space, but also let's not do that only publicly. Let's find the right balance between innovation that will happen more on the private side and infrastructure that will happen more on the public side, and combine the best out of these two worlds. I think overall, yes, it makes a lot of sense, and also sovereignty. If we talk about SWIFT, if we talk about settlement systems, if we as Europe don't want to be cut off. That is very, very straightforward. So yeah, I can agree with a lot of those points.
Thank you very much. Heike, would you have a comment on this?
Yes, because Christian mentioned stablecoins, of course, but when you remember this stablecoin project of, when was it, Meta, those days it was Facebook, that Libra project was, you can say, the initial moment for the digital euro, because it made clear that there is the possibility that those big techs can offer something which can make yes, official money to a kind of niche product, and that is what we didn't want. And so this was the reaction of the central banks and the regulators were twofold. On the one hand, you had the digital euro project, and on the other hand, there was Mika born. And for that, we have now the environment where we can say that there won't be a stable coin which we don't supervise, and that was with the Libra project that wasn't planned. And so so I think there can be, of course, a kind of coexistence, but for the broad, or for the majority of people, I think it's more reliable and trustworthy to have something which is backed by the central bank.
Well, thank you very much for this. Please.
A question then to you, I guess. So the US model, if I can simplify it, is let the stablecoin grow and then we come and regulate it. And from my understanding, the US Federal Reserve has said they're not going to do a central currency. They might regulate Tether and the other companies. Do you think we'll get a large European stablecoin, or will the other ones come in and, again, reduce our fraction of digital space?
Maybe I can start with that, and maybe Heike can touch upon that. I think Mika did some things right in this regard, but we need to ensure that it's not prohibitive. Because if we have a look in some of the regulations for EMTs, you have limits on how much transactions you can do, you have limits on how much exposure you can have, how much customers you have. And if we are going that way, which is one way to ensure consumer protection, investor protection, we need to be just ensure that the business is not dropping out of that and going to Tether and the other ones again. Because otherwise, our regulation, our approach in ensuring more consumer protection will lead to a less regulated field. And maybe I'm too blunt in this, maybe it's the industry perspective, but if we really want to have competition of the digital euro in this regard, we need to really have a proper UX. And I think Libra was mentioned. Libra was a great example. If we all think about that for a moment, if we have now in WhatsApp, like in China, this is very common with WeChat, we would have a function where I can send you now €2 for the coffee you just paid me outside, and then that would be from a user experience perspective, so easy way to spend digital money. You saw what Apple did, where it had direct transfer between the euro, between the phones, etc. So yes, digital euro could work, but we need to make it as easy accessible for the public. And if we don't do that, we will still have a lot of stable coins out there. And if we don't regulate them correctly, but over-regulate them, I fear that the industry might be trying to play by the rules, and then you have the people outside of Europe not playing by the rules, so not a real level playing field, and then suddenly the volume is going out of Europe again, and we have actually a less regulated environment that is then competing with the digital euro, which would leave us in a, I would say, bad place in the first instance.
Heike, do you have a comment on this point here? How can a central bank contribute?
We see the challenge. That is for sure. That people have as a reference, for example, Apple Pay and things that are working very convenient. And we know that we should offer something which is competitive. But we are working on this, and we do it with the help of the whole sector, the whole industry. We have a rulebook development group where nearly every stakeholder is represented, and especially there we need the experience of the banks, because of the commercial banks, because as central banks we do not have the experience, and it's not our core competence to offer a direct contact to people. So this is the experience we need from the industry, and we try to involve them as much as possible.
Thank you. I have another question for our regulator. Specifically, I wanted to ask if there were any global trends with regards to CBDCs that you think Europe could implement, or if there are any case studies that you think are interesting out there. Of course, this question is also open to our other two panelists.
I can't think of the case studies. I haven't studied them, but I follow the stablecoin world, and it seems we're behind already. I think that's... So we have to be careful. Well, I don't know how we can change that right now. If it means, again, going through 2 years of MiCA to improve it. And I'm a little worried. I share your concerns that already the USDC is setting up in Paris with a big investment, getting the regulator to approve it in France and then become Europe-wide. And if the stablecoin becomes an easy thing to use with whatever version of information, whether it's WhatsApp or we're gonna have a problem with that. The speed is always a concern. So my concern is that for the European Central Bank, that we move relatively fast, not get stuck on the details, and let the central bank work out what is best for it, as opposed to us as legislators getting into the detail of, for instance, holding reserves. Is that really the legislator's decision to go into the money supply? It shouldn't be. It should be for us to allow it to happen, and then let the ECB, which is consulting with the Commission, and the rest of us decide on those specifics. If we get bogged down as legislators with our typical approach, which I have a problem with, amendments on the levels, that could take a long time. So I think the way that the ECB should handle it with us is we give the green light, and then they come up with the details. And then we more or less have done the stakeholder discussion, which has already been going on for 3 years. The research has been done, and we're ready to move to the next step. So my concern is the speed. The examples are very powerful out there, but I haven't studied them as business models. Thank you.
I wanted to ask, how do you see the industry collaborating specifically from this point of view? How would you try and ensure that organizations in Europe manage to contribute to helping regulators understand the topic?
Of course, that's the idea of talking with stakeholders. That's, I guess, why I'm here today as well. More to listen rather than to give directions, more to hear so we can take these discussions to our team, our political groups, and do the job of going over the details. So it's very important, I guess, for all MEPs to be part of this discussion who are interested in this file. And it's a very important one. It doesn't have the social dimension of many other files in the EU, but in the end it has an impact on the daily life of the European citizens. So if you want to take it to the grand political level, yeah, it's not environment, it's not green, it doesn't have that, if you like that awful word, the sexiness of the other projects. However, when you talk to the average person, actually, if you told the person tomorrow you had a digital euro, he wouldn't think about it very much. He wouldn't think of all the process we're going through, the average person on the street. If he just saw on his screen a digital euro, whether it's Belgian or Greek, I don't think he would wonder about the details of how it will work with the POS, what the holding limit will be. So in the sense of working with the citizen, it's easy to convince. It's us, in a sense, who are working on all the details, which is part of the remit. So I think if we get out there to the people, it's a very easy project to say, well, we're just going to have one more currency, it'll be a euro. And if you go to the merchants, the Eurocommerce, for example, they like the idea because they think it'll be competitive with the big paying agents, the two non-European ones, which is again the sovereignty issue. So those are some of the issues that come up.
Maybe I make a bold statement here, but I think we nearly 14 years ago, we decided to go with the e-money directive, and we decided that there's also a way for private parts to issue money in one way or the other. And what I like about Libra was it was a real catalyst for having Mika out there, and I think we are really getting where we need to go with this. But on the other hand, I don't like the approach that we say now, this is going so deep into our sovereignty, it's affecting all our way, how we handle money, etc. So I think it's really, really important that we stand to the decision that was made back then. There is a private form of money, e-money, however you want to call it, so it's not like the governmental issued money, but there is some way. And if the people are holding to the rules, I would not put them worse off. So I think that's a very important distinction for me to make. I know you didn't imply that, but
I see.
But for me, this is just key, because otherwise we'll have one way that would be the, I would say, governmental digital euro, and that will compete with all the great UX, Apple Pay was mentioned, other were mentioned, and I guess that might fall short. So I think direct competition also between e-money, e-money token, and central bank digital currencies is important. Speed is ultra important, of course. But I think one more topic to be kept in mind is what are the use cases and what exactly do I use them for? Because, to be honest, in the crypto industry, I don't think that the digital euro will be the most important one. If we look at the current value limitations for investing, that's not going to fly too high. If we think about the point of sale or online shops, I think it's a very different story. That makes a lot of sense. So let's go one step deeper, although I agree with the approach, legislator doing their part, letting the central banks do their part. But let's still think about how we can ensure that it's used day to day. Otherwise, I think CBDCs might fall short in their result at the end.
So specifically on the use cases, maybe I would like to address a question to Heike. A lot of times it's mentioned that a CBDC will be used primarily to guarantee financial inclusions, and other times it's basically to have a tool that is directly liable to the European Central Bank. I wanted to ask you, if you had to think of or pinpoint the unique use case specifically for the digital euro or more generally for a CBDC in Europe, which choice would you make to describe it?
Let me please, one remark before is about the speed argument. That is something we also as central banks find quite important, because this legislative process is quite complicated. Of course, it's a democratic process. We have to respect it in any case, but it's important because we can't start before we have the legislative framework, and that is we are at the moment as central banks doing everything we can do to prepare to issue a digital euro, but we have to wait for the law. That is a fact. So speed, of course. And your question, what is the use case? The use case is that you don't have to think anymore which kind of payment means I have to use when I'm paying in this situation or in that. There's always, there should be always one default solution you can use everywhere. That is the idea. There are, of course, a little bit some very few exceptions in the regulation that somewhere, let's say, a very small enterprise with less than 10 employees, there could be an exception. But in the end, we see there will be the trend to these kind of cashless means of payments, and for that we would like to offer something which you can use everywhere in Europe and in every payment situation, and that is the charm we can offer with the digital euro.
And perhaps addressing a question to Christian on the infrastructure specifically of it. Does a CBDC have to be DLT based in order to qualify as a CBDC? Does it not? And what do you think are the added values of this?
I think, as speaking on behalf of the blockchain industry in this regard, it would be a very good thing if we have it maybe not on a permissionless blockchain, because that might be one step to jump too high, but at least DLT basis, that would be good. I think more important are the features, programmable money, really digital money. Those things are very, very important. Blockchain would be a very nice add-on, and I would be hugely in favor of it. But I think also there, I think it's okay to let the central banks design the overall infrastructure, but then again get private sector on board to help with the details and help with the connection for the user experience. Otherwise, it might be falling short again. So yes, of course, it would be a great thing. But what I heard is that a permissionless blockchain is out of the way anyhow. And then, yeah, I don't know how much it will be DLT based. I would be in favor of it, obviously.
Perhaps Heike, oh, sorry.
Just a brief comment on that word use case. I don't think that's the appropriate thing. Why would I look again at the average person, the one that I have to talk to when I go back to Greece? I think there's a psychological element that if the central bank puts out a currency, given the world where people say, should I do this currency, that currency, they know that there's a neutral one that is guaranteed. So the stable coin and all the other ones, it's confusing. So here they have a pure backup, like having the cash. So I think, in, let's say in 5 years when it's working, I think will the digital euro be a sliver of the market? Or will people feel that the average person, not the ones who are playing the games and the ones who are sophisticated and look at all the currencies, will say, I have my basic currency that I trust. And there is that element. And that's why for the ECB to do it is a powerful psychological argument, because in the end, money is an issue of trust, as we all know. So I think it's hard to predict now, let's say it happens, in 5 years, what the pie will look like of the various uses. And I'm saying the positive side, that the average person in the Greek village, let's go back there, he probably feels careful, rather than all the funny ones, Apple Pay, Google, whatever, I don't like to use all the names. Oh, I know this one. I feel comfortable. So I think that's an argument why it actually may be used more than why use it. So it's hard to prove, of course. It has to do with psychology and how people look at the digital world. But in the confusion, this one will be, I think that was mentioned before from the bank, a pure case for the average person.
So specifically on, this is unfortunately going to be my last question, but if we have to talk about adoption of the digital euro and your vision for it, effectively, let's say you had a magic wand. How are you going to use it? What is the biggest threat or the biggest fragment that you find right now for its full adoption? This is a question.
The threat I think would be, well, that's the technical side, that it would cost too much to actually have it function with the existing infrastructure. If we're not going to go, if Visa took it on, let's use one of the names, and did it, okay, it would happen the next day. But is that really our goal? To have the competitor have the euro? So if we have to make a whole new infrastructure, that's the technical, then I have a worry we won't make it, because that's something best left for the market to develop. But the idea is that we won't have to make a whole new infrastructure. So there I worry. I worry about the technical. On the actual spiritual, it'll work in terms of actually having it out there. If we had it out there, it would work. Getting it out there is going to be an issue. But I say, for the legislator, it's for us to allow it to happen and let the details be done by the ones who know best.
Christian?
That's a hard one to answer. I think let's see whether it's really moving, and let's see how we all get then, I don't know, our parents, grandparents to really use the digital euro. I think the competition that is out there with just tapping the card and having it NFC is something to be taken into consideration as well, because it's not like our payment systems isn't working. So I think overall, I reiterate my message before, we need to be clear where we want to fight and what we want to have with it. Do we want to have this as a competitive advantage for Europe? Do we want to improve UX and safety for the customers? Is this the holy grail and it can do everything? I don't think so. I think we need to decide spot on where we want to do it and where we want to challenge other players. Otherwise, there's a big risk, and I think a lot of people in the industry see it that way, that it might fall short of its expectation, and it's a project that is then, at the end, not so widely used as intended.
Heike?
Yes, I think, thank you for mentioning the trust aspect. I think that is quite important in this context. But I think we will, I hope we can develop the digital euro in that way that it will make life easier, the payment life of people everywhere, on the one hand, and on the other hand, we will develop also solutions for those financial market sector demand for DLT-based solutions, because we are also active on that side. But for the, let's say, what we call digital euro, that should be something, as it was mentioned, for the everyday life, where you don't have to think anymore how to pay in the digital world in Europe. And you can pay in a European way, pan-European, and yes, and as convenient as you are used to it at the moment.
Thank you very much to all three. Perhaps, is there a question from the audience to our panelists? We have one.
Hi, Nikos here. So thank you very much for your time indeed. We heard a lot about, sovereignty and the opportunities and the public, being more in favor of, such an approach. But we did not hear anything about citizen concerns, about privacy. And as you mentioned, money is an issue of trust. And when we have, in this day and age, when there is a lot of mistrust in our authorities, especially Eastern countries, and I'm really happy to see a Greek representative here, how are you addressing the citizens' concerns? Because we know that there's no Central Bank, Bundesbank, whatever, without its citizens. Thank you.
I can answer. From our point of view, the most, the best argument is that we say there will be cash cash won't disappear. So people who don't trust all these digital things, they can use cash. That is on the one hand. On the other hand, we can show that we will fulfill the expectation of the legislators that there will be highest standards of privacy with the digital euro. So they have the alternative if they are completely mistrusty to all those digital stuff, and if they would really like to learn about it, then we can show how we construct the digital euro, and they can have really trust that the central bank, neither the central bank nor the government will follow their transactions.
Briefly, from my understanding, maybe I'm repeating what you said, and it's a good question. We didn't bring it up, the privacy. That's one of the issues that's being looked at, and supposedly the way it'll work is that the central bank, the ECB, will be blind to the user. They won't know who it is. Now, of course, I think the banks already know who it is, so it's a little bit odd that that is a concern. I mean, the banks already know what we're buying. They just look at our payments. But the ECB will not know. That's the technical side. So the technical people are having it blind, and you can probably answer better. So they won't have information on the purchase of the citizens, if that's a concern. That's my understanding of the technical side.
I think that's going to be a very interesting discussion, because I think this was on the top of everybody's mind when you talked about CBDCs. So it's a very good point to mention. On one side, there are concerns that central bank currency, one way or the other, will have illicit funds and stuff like that. So there's an AML risk behind, because it's, even though I agree with Heike that it's not directly with the central bank, it's much more direct than it used to be. So that's a big concern, and I guess this will touch into that point. But let's maybe go back to 2008, and where we had the great financial crisis. I think there's a reason why Bitcoin was published this year and why it went live. So one thing I really want to reiterate, and it's the same point as e-money token, there are alternatives out there. Bitcoin is also an alternative. Please not go the way and try to prohibit it, be it for ESG reasons, be it for other reasons. This is an active competition that should be there, and it should not be only one way to handle cash and other things. Otherwise, we might fall into exactly those pitfalls that were mentioned. And if the people can choose, this is how they can build trust. If they are faced with monopolism, it's not trust after all.
Well, thank you very much to our panelists. Unfortunately, we are out of time, so please... Oh, sorry, there's another question, perhaps. Sorry.
I wanted to.
Heike, please.
Yes, the remark to Bitcoin, of course, I think, but Bitcoin, I think, is not that much a competitor when it is around payments, because from our point of view, it has developed more and more towards a speculation object and might be a successful one, but for payments, I think it has not that much relevance.
I think that was a lot on everybody's mind. We can talk a little bit about Lightning and about innovations in this regard. One thing I want to mention is that also CBDCs and the digital euro will be a storage of value. So one topic that needs to be fixed on European Central Bank level, European-wide, is inflation. And I don't say Bitcoin is the alternative to that. It's not a speak for Bitcoin, but I'm just saying we need to also think about this approach of how we hold value, how we ensure, for example, a right level of interest for digital, for the digital euro, to make it really attractive in this regard. And I think to just not underestimate that there are other things out there, even if they're not used day to day to pay things. I think that's a very, very important thing. I agree with Bitcoin was not there for a day-to-day payment thing, although it started that way.
Thank you, everyone, and please join me in applauding our panelists. Thank you very much.